Hello everyone, Dave Landry here from DaveLandry.com, and this is Trading Simplified, episode 32. Wow. So what are we talking about? Well, let's talk about what's standing between you and your longer term success. I added that longer term at the last minute because a lot of people have just hopped into trading and they're doing really good, and that's great. And we're going to talk about that in just one second, but I think going in with an open mind for longer term success is key, and that'll make a lot more sense. I want to do a quick mystery chart updating. And by the way, housekeeping, I do take requests. If there's something you want me to cover, please let me know. And you can let me know by going to davelandry.com/contact. And answers requiring a lot of thought or something that requires a lot of thought, I can cover in my Thursday shows, which is Dave Landry's The Week in Charts, which you can find on my website homepage, davelandry.com. Or I could point you to some information behind the firewall, which may answer your question. Now, the other thing, if you're interested in the slides and limited access to my members area, which includes a market timing course and some other goodies, and I'll give you all three of my books in PDF format, go to davelandry.com/StockCharts. And the slides have all of the setups that I've talked about and some of the market timing stuff over the past 30-something episodes. I've been doing these bear market updates. I guess I'm going to have to change that to maybe bull market updates, given the nature of the market. But if you want a more recent market update, or a recent market update, I should say, go to my website, check out the market in a minute, and click on that bear market updates page. All right, let's do a quick mystery chart update because we have a lot to cover this week. Now, this is one I showed a couple of weeks ago, and it's CHWY, which we're going to talk about in just a few minutes. CHWY, entry of 40 to 70, protective stop of 35 with an initial profit target of 50-40. So those were the parameters. And you could find these at www.davelandry.com/archive, and you go to that page. I think this one is from the 14th, but all of them are there going back many, many, many years if you want to follow the methodology just to see how it's done in the past, warts and all. So we had an entry here. Now, there was a little discretion on the entry, which I covered in a recent weekend chart, so check that out. You can get those on my website. And then we had a stop down here around 35, or at 35 exactly, and initial profit target of 50-40. Now, I got in a little late on this one because I used a little discretion on the first entry, but in following my own trading service and following my own advice, I like to try to mimic the performance the best I can, and took a second entry on this particular stock. We'll follow up on this in future shows. Now, let's talk about the markets and you peeling the onion on trading psychology. Now, everybody's a setup junkie, present company included, and everybody searches for that holy grail and that perfect setup, and then eventually you realize you need a little money management, and then you realize, maybe not so eventually, a little bit sooner, that a lot of this is all in your head. It's psychological. In reality, all three of these should be flipped. Give me somebody with a good attitude, not necessarily somebody that's incredibly smart. In fact, my nickname is Trend Following Moron because I just work really hard to just blindly follow the trends. But if you flip it over and work on yourself first and understand the psychology involved in trading, and there's a lot of that we're going to get to over the next several weeks, and there's even a neurology involved. And once you begin to wrap your head around that, once you begin to peel that onion, then it starts to make more and more sense. And of course, you need a heavy dose of money management, and obviously you will need a methodology. Now, you are what stands between you and your success. And that's why trading psychology is so important. Quite simply, we're just not made to trade, and that's on a psychological level, and I didn't realize it until probably 7 or 8 years ago, but it's also on a physiological level or neurology level, and we're going to get into that. I know, you can't wait, right? like Greg Morris says, just don't operate heavy machinery after viewing. So, in peeling that trading psychology onion, when you're looking at trading from the outside, or as you'll see in a few minutes, if you just started trading recently, you're probably thinking this trading thing is really, really easy. But as you get further and further into it, you realize that it's not so easy. And then there's a lot of psychology again and neurology involved. And it actually becomes a journey of self-discovery. Now let's talk about trading is easy. And this is relative to recent markets. So a lot of these quarantine traders, these newly minted quarantine traders, I should say, they come in and they're like, wow, this stock market is cheap. It's 35% off. That has to be a bargain. They come in and they start bottom fishing. And lo and behold, the market rallied up 34%. In fact, if you're watching this presentation and we're above 30.50 or so, it's up 35%. Well, if you're new to trading, you might be thinking, wait a minute, it went down 35%, back up 35%. Shouldn't it be back to break even? It's like, well, no, it's not that simple. The market would have to rally 50-something% to get back what it's lost. Remember, if a market loses half of its value, it has to rally back up 100%. And that's why trading is unfair and why I spend so much time talking about money management. No matter how much money you make, 100%, 1,000%, 10,000%, if you lose 100% of your money after making all that money, you obviously are out of the game. Now, getting back to the newly minted quarantine traders, you're thinking, how can I make some money? I'm kind of bored in quarantine. Let me go outside, get some fresh air, and think, how can I make money? I think I want to trade. What can I trade? What can I trade? Skippy, knock it off. I've got to get this dog some chew toys. Let me Google chew toys. CHWY.com. Let me check that out. Oh, they got some really nice little chew toys. Maybe Skippy will stop humping my leg if I get him some chew toys. Hey, let's check this stock out. Oh, it looks pretty low. Let me go ahead and buy this stock. And what happens? The stock doubles or so over the next several months. So you're probably thinking, hey, this trading thing is pretty easy. Next thing you notice while you're in quarantine is like, well, wait a minute. I'm getting kind of fat here. What about an exercise company? So you check out this company called Peloton. By the way, I could probably do an ad for Peloton at least a few years back. I lost 40 pounds on the Peloton. Unfortunately, I found those pounds. But before I digress too far, you're thinking this Peloton company, everybody's in quarantine, they're going to be buying these bikes, these ridiculously expensive bikes. So let's buy this Peloton stock. And what happens? Oh, the stock doubles plus over a very short period of time. Now, I'm a man on the street kind of guy, and I think that can be a microcosm of something much bigger. If you check those bear market updates, I have a few stories about people I've bumped into in my travels. Now, I'm not necessarily picking this one individual because I know of several people over the last, well, going back a few months before quarantine, that trade off their phones and only trade off their phone. And one gentleman was bringing some materials to my house, and we got to talking about markets because I'd set him up with some members area stuff so he could start learning. But he had already been trading quite a bit. Now, I'm not picking on him in particular, but a lot of these guys are on their phones. And if you're just trading on your phone, you're not a real trader. I don't want to pick on anybody, but if you want to be a longer-term successful trader, it's okay to use your phone as a tool, but make sure you're using something else. Now, one person I was talking to is like, well, how are you finding these stocks? Because one of the stocks he found was actually one that I myself was looking at. And he's like, well, these chat dudes in my trading app are talking about this hot, cheap stock. And it just so happened that this thing just absolutely took off. But I can assure you that the chat dudes, who might be pump and dump type of people, aren't always going to be this right. Now, I did receive this text. I made a 30% profit this month. Is that good, bad, or normal? This is from a phone trader. It's like, well, let's do some math on that. Let's say you have a $10,000 account, and let's say the first month you make 30%. That's 13,000. Then the second month, third month, fourth month, fifth month, sixth month, seventh month, eighth month, ninth month, 10th month, 11th month, 1 year, a year and 1 month, you would make $500,000. Well, you'd have to take out the $10,000, so you'd only have, and still have $1 million, $500,000. Now, 2 years later, your account would be 52,802,901,329. Now, I love what I do, and I really enjoy it. I really enjoy my educational business. But if I could make 30% a month, probably within a year or so, you'd never see my fat arse again. So, no, 30% is not realistic. Now, along the lines of trading is easy, the guy that screams on TV is talking about some of these Corona stocks, and here's one that went straight up. In fact, he has a list of these stocks, and a lot of them have gone straight up. The thing to realize is the guy who screams on TV, I just so happened to be reading a book that's about 10 years old. I tend to have a book fetish when it comes to trading, especially trading psychology. And I'll buy up all these books, and sometimes they'll sit on my shelves for 10 years before I get around to reading them. And it was kind of interesting. The book that I was reading talked about how the guy who screams on TV is one of the most wrong stock pickers that ever lived. Now, I'm not the grand poobah or anything, but I'll admit when I'm wrong. So the point I'm trying to get to here, believe it or not, I have one, is it ain't so much the things we don't know that get us into trouble. It's the things we know that just ain't so. And that's Antimus Ward. I hope I said his name right. Which is along the lines of some of the things that Mark Twain allegedly has said in the past. So trading seems really easy for a while, and then you begin to realize that maybe trading is not so easy. And this is where you do a little introspection. You're like, wow, this trading thing really isn't that easy. In fact, it's quite hard. Is it just me? And trading could be a lonely sport, believe me. And again, once you wrap your head around all this psychology and a little bit of neurology, it doesn't get easy, but it does get easier. Now, let's take a look at some historical examples of why trading might not be so easy. So if we go back and look at the NASDAQ of 2002, it seemed pretty cheap. It lost half of its value. In fact, I was in a presentation once, and I actually had to bite my tongue because somebody suggested whenever an index loses half its value that you should sell puts. And that'll work until it don't. Anyway, the NASDAQ went on to lose another 50% of its value. So you're like, dang, half off again? Now, the guy who screams on TV a while back was talking about a stock, and he was positive, and he used some very definitive statements saying that it's not an opinion, it's a fact, that this stock will be $300 by year end. And this is the stock in the background. If you Google the guy who screams on TV, you'll see a lot of his disasters. And this stock lost about 60% or 70% of its value before bouncing back a little bit. But you can see it's nowhere near $300 by the end of the year. And it was close to $200 when the year got started. Now, let's say in more recent times, you're looking at some of these hot little medical companies and you're like, check this out. This thing has gone straight up. It's got the Big Dave blue arrow, the big blue arrow that Big Dave's always talking about on it. It's got to be good, right? So you just hop on board, and then what happens? The stock implodes, losing about 90% of its value overnight, which might prompt you to say, mother, father. And then, of course, you soon discover that maybe trading isn't so easy, and you try buying these stocks because they're low or because somebody in chat talked about them, or in some cases, just because they're going up, and you find out that, wait a minute, it really isn't that easy. Now, a while back, I did a presentation, and this is a screen capture from YouTube, and I started off the morning putting my slides together, and it's like, well, you know, there's this slope of what you think you know as opposed to what you actually know. And when you first start learning about trading, you're like a sponge. You learn all these things, and a lot of those things are true. And those two things, what you think you know and what you actually know, are congruent, and they tend to rise in tandem. But pretty soon, especially if you hit on some initial success, you'll think that you know a lot more than you actually know. And it could be quite humbling. And this is another one of the psychological things that I'll get into in a lot more details down the road. So longer term, what eventually happens is what you actually know is actually more than what you know. But that's many years down the line. Now, I did some Googling on this the morning I was working on these slides, and this is from a presentation from probably about a year ago or so. And then I found out there's actually a name for it. There's nothing new under the sun, as you'll find out many times in trading. Sometimes I'll come up with some gee-whiz pattern and then find out that somebody 100 years ago, literally, was talking about something very, very similar. But it's called the Dunning-Kruger effect. And that's where you think you know a lot more than you do. Now, I don't want to discourage you from trading. I'm glad if you just started trading, that's great. Just make sure you go in eyes wide open. Like I told the gentleman I mentioned earlier, it's like, look, just trade at a really, really small size because you don't know what you don't know. This reminds me of the Socratic paradox along the line of reasoning from Socrates. I know that I know nothing. And believe me, markets can be very, very, very humbling. Now, one thing I've been searching for several days, and I can't find it. I'm going through my books, my notes, and even some internet Googling. So if somebody finds it, let me know. But somebody had talked about there being very little correlation between your initial success as a trader, both good or bad, and your longer term success. And if I had to attribute it to someone, I would say it's probably William Eckhart, because he's got a lot of really, really great quotes, and you'll see me quote him quite often. Now, I'll go one step further and say that the initial success, if you are successful, could be inversely correlated to your longer term success. I've had one gentleman come in right before the bear market, which started in late 2007. And I remember, as I've said 1,000 times, apologizing to my clients because all I could find was shorts, and I was showing these short side setups, even though the market was banging out new highs, not without a lot of vigor, but slowly creeping up into new high territory. And his first trade was a short, if you can believe that. And he fell in love with the short side. I had another client around the same time who was really into this arcane methodology, and it dovetailed nicely into the market action. In other words, everything works better with trend. And he shorted and shorted and shorted and did incredibly well. In fact, I actually begged him to cash out, pay off his condo, and have a free place to live, and just keep trading with a small portion of what's left over. And if he was that great, then just simply do it again. So the initial success does not necessarily mean you're going to be longer term successful. And what happens is you end up chasing that high. It's kind of like a drug addicted person or something. You want to go back and you want to get that fix. You want to figure out what you were doing and do it again. What's changed? And as you'll see in a second, you could end up on a hamster wheel. And I have many, many stories of people I knew. I was up close and personal with someone who actually ended up on doorstep because he was homeless. And he round tripped an account. He had about $5,000, which I'd later find seemed to be of questionable origin. Don't know that for a fact. And he ran it up to roughly $1 million. I saw a statement that was $975,000. And then when he got down to about 1,000 or two, he got a letter from the brokerage saying, you obviously don't know what you're doing. We are going to suspend your account. Well, it'd have been nice if they would have suspended his account when he was down $500,000 from that million. Anyway, so I think they can be inversely correlated. You could end up chasing that high. And there's actually a neurology in trying to chase that high. And I'll get into that a little bit when we get to neurology. You're probably thinking, hey, I want to party with this guy. So let's say you've come into the markets over the past several months and you've got that 30% or 35% tailwind behind you. You're trading these momentum stocks that make a lot of sense, these biotechs, these CHWY.coms and things like that. You're doing really well. Well, I don't want to jinx you, but likely when conditions begin to change a little bit, or just something as simple as sector rotation, and I love momentum, don't get me wrong, but momentum gets hit hard. And then when sector rotation kicks in, you have to go out and find new momentum. But when something hits you, you're not sure what hit you, so you're thinking, maybe I should add some indicators to the chart. And then you might find yourself adding more indicators. You might even start studying some arcane methodologies. And then you could end up on a guru hunt. And these idiots out there, it's amazing. One guy, he's walking around the woods and his cameraman said, how much did you make today? And he says, oh, I made, and he opens up his backpack and he had $60,000 cash in it. So let me get this right. He made $60,000. He wired it to his bank, which sends up all kinds of flags, okay? Hints of drug dealing or whatever. Pulls the money out of the account in cash, which you have to fill out a whole bunch of forms thanks to the Patriot Act, because you can't take all that money out the bank without letting the government know. So lots of forms, lots of letting the government know. Also, can you really get a wire done in one day after you've been trading all day? Usually there's a delay, and usually banks, when they see a wire of that size come through, they'll hold the funds for a few days. But anyway, I digress. No, I don't. Let me keep going. So you're going to take that 60 grand, you're going to put it in your backpack and go walk around the woods. Now, I would never harm anyone, but I'm thinking this guy deserves a Darwin Award. If he got bopped over the head and lost his $60,000, I wouldn't have a whole lot of love lost for him. Anyway, long story endless. If it sounds too good to be true, it probably is. I would make a lot more money in my educational business if I hyped it up a little bit instead of talking so much about psychology and money management. Now, one thing I see quite a bit when people end up on this hamster wheel is they begin to reinvent the wheel. It's like I'll show people something really simple, such as a TKO, which I'll mention briefly in just 1 second. And then they'll come back and says, well, I've got this idea, and what if we did this, and what if we did that, what if we did these indicators? And that really gets you stuck in that hamster wheel. Find something simple that works, that someone else has spent a lot of time developing. Make sure it makes sense to you and follow it. So again, you end up on this hamster wheel, but the problem is every now and then you hit it just right. In one of these things dovetails in with the market. As I preach, everything works better with trend. And then you're very happy, but unfortunately, you end up back in the cycle again. And then it ends up being a rinse and repeat. By the way, some of my best clients go through these gyrations for 10 years or so. They come to me for a few months and they're not really happy with the performance or nothing's going on. And they go away and they chase rainbows for about 10 years. And then they come back and say, Dave, I get it. this trend following with money management and all this psychology makes a lot of sense. You're not going to get rich overnight. You're not going to make 30% a month every month. But if you stick with it longer term, you'll do okay. I get it now. So eventually you'll have to break that cycle. Now, if you're still printing money and you just started trading, you're probably thinking, what does this guy know? I'm printing money. I'm making 30% a month. Well, trust me, eventually you could end up in this cycle and you will have to break that cycle when it occurs. Now, to save you the next 6 to 8 weeks of lectures on how we're not made to trade, the psychology, some hacks, and some little tricks and tips that you could do, neurology, commitment devices, a bunch of other rants and random thoughts, just do this. Now, before we discuss do this, I have a question. Do you want to be a trader for now, or do you want to be a trader for life? Now, if you want to be a trader for life, this is how you approach it. You want to find something simple and stick with it. So let's break that down. Let's say you watched one of my episodes, one of my early episodes, this TKO thing makes sense to you. And if all you did was trade TKOs, I'd be willing to bet you would do pretty good. Now, keep in mind, they don't show up every day. Traders Magazine is having me redo one of my older articles, and they wanted some fresh examples of TKOs. Well, I don't have any on the fly, at least not today. So you wouldn't necessarily have a setup every day, but hey, that's okay. Linda Rasky once said, by the way, all you need is one pattern to be successful, and I do believe that. Now, bow ties would be something else that you might want to take a look at if you find that an indicator helps you to wrap your head around what a market is doing. That would be another good little pattern. Bow ties and TKOs, two of my most popular patterns, and very simple to recognize. So follow those two. And the number two thing you need to do is just simply follow the process. And here's an example from a prior show, CMRE. We have an entry, a protective stop, initial profit target, and that was a TKO. And you can see it triggers. We have a stop down here, initial profit target up here, and it rallies nicely. We start bumping that stop up a little bit, and then it continues to rally, and we continue to trail our stop higher, and then eventually we get stopped out. As I often say, all trades eventually end badly. So number one, again, find something simple, such as a TKO, and number two, follow the process. By the way, if you're looking for the trades that I recommended, warts and all, of course, davelandry.com/archives. I want to thank everybody for watching. Again, if you would like the slides from all of these presentations and a lot more information, go to davelandry.com/StockCharts. And if you need to reach me, davelandry.com/contact. Thank you so much for watching. May the trend be with you.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.